Good morning, Dr. Jane. Good morning, Lisa. Have you read the notes that I gave you yesterday? Can you explain to me what you understand? Yes. I have read about the audit procedures. It is about processes how auditors obtain the audit evidences to make a conclusion on the audit objective and give opinions. There are several terms in the audit procedures. First is completeness. This is mean that all the transaction must be recorded in financial statements. Second is occurrence. All the transactions and events that have been recorded actually took place and it is related to organization. Third is valuation and allocation. All the items that have been recorded must be in appropriate amounts according to company policy and it is relevant to financial reporting framework. Fourth is classification and understandability. I'm not sure about this one. Classification and understandability is the financial report must be made clearly so that the users easily to understand. What is the next one? Next is accuracy. The amounts and other transactions must be recorded at the correct amounts. After that is rights and obligations. The entity has right to its assets, which is it free to use or to dispose their assets. Don't forget that the entity is obliged to pay off the liabilities that are shown in the statement of financial position. Okay, I will remember that. Other terms is existence. It's mean that the assets, liabilities and equity are physically present or belong to the entity on the reporting date. The last one is cut off. All the transactions and events must be recorded in correct accounting period. Good job, Lisa.
Test of control. Consider 1. The risk assessment is based on an expectation that internal control operates efficiently, and when substantive procedure alone will not provide sufficient appropriate audit evidence at assertion level. Tests of control are performed to obtain evidence about operating effectiveness of control and preventing, detecting and correcting material misstatement at assertion level. Do you understand what is substantive analytical procedures explained in the class?
Not sure. But it involved comparison of amount or relationship in the financial statements, with developed from information obtained from entity and other audit evidence.
What is the purpose of substantive analytical procedure?
The auditor designed the procedure to reduce the risk of not detecting the material misstatement and relevant assertion to an acceptably low level.
Substantive procedures are used to gather evidence in respect to all material classes of transactions, account balances and disclosures. They are designed to be responsive to the assessed risks of material misstatement at the assertion level. These procedures are designed to gather evidence that will substantiate a financial statement amount. They are used to obtain audit evidence regarding certain assertions such as existence, accuracy and valuation. These procedures are designed to substantiate predictable relationships among both financial and non-financial data. They are mostly applicable to large volumes of transactions that tend to be predictable over time.
There are substantive analytical procedure that could be used to predict total transaction stream, such as sales.
These include sampling, extended substantive procedure, test of control and procedure that address specific and significant risks.
Sampling is basic procedure may not sufficient to reduce audit risk to an acceptable level. Additional confirmation may be selected using statistical sampling.
Extended substantive procedure may need to be increased as a result of unsatisfactory result when test control occur. Substantive procedure related to significant risks shall address the specific risk identified and need to be designed to obtain audit evidence with high reliability. There are a number of techniques that can be used to perform analytical procedures. The objective is to select the most appropriate technique to provide assurance and accuracy.
It includes ratio analysis, trend analysis, break-even analysis, pattern analysis, and regression analysis. Each technique has its own particular strengths and weaknesses that need to be considered when designing procedures. A complex technique such as regression analysis may provide statistically reliable conclusions about recorded amount. Appropriateness of evidence refers to degree to which evidence can be considered believable and trusted. It include:
evidence must pertain or be relevant to the objective, that audited testing before it can be reliable.
Evidence obtained from sources outside the entity, for example, banker, customers, another professional body. When a client's internal control is effective, evidence obtained is more reliable than when they're weak. Evidence obtained directly from auditor, through physical examination, observation and computation is more appropriate. Evidence will not be liable, unless the individual providing it's qualified to do so.
Objective evidence is more reliable than evidence that required considerable judgment to determine whether it is correct. The timeliness of audit evidence is important to determine when it is accumulated and to the period covered by the audit.
Hi. Hey? Hi. What are you doing here? Waiting for the bus, of course. Great. Same to me. I want to ask you, what is audit evidence? All information is used by the auditor to express an opinion, and includes the information contained in the accounting records, underlying the financial statements and other information. Oh. What should the auditor do? The auditor should obtain audit evidence by testing the accounting records. After doing all the procedures, the auditor can determine that the accounting records are internally consistent and agree with the financial statements. Oh. Okay. Any other information that I should know? The auditor can also use audit evidence from the minutes of meeting, confirmation of third parties, comparable data about competitors, and other information available to the auditor that are permitted to reach conclusions through valid reasoning. Great. Thanks, babe. You are welcome.
Evidence. Types of audit evidence. Physical examination. Observation. Documentation. Confirmation. Inquiries of the client. Analytical procedures. Reperformance. Physical examination. The inspection of a tangible asset. Most often associated with inventory and cash. Also applicable to the verification of securities, notes receivable and tangible fixed assets. For example, after check is signed, it becomes an asset. Generally, it is an objective means of ascertaining both the quantity and the description of the asset. However, it is not sufficient evidence to verify that existing assets are owned by the client. Observation. Use of the senses to assess certain activities. Rarely sufficient by itself because there is risk that the client personnel involved in those activities are aware of the auditor's presence.
Documentation. The auditor's examination of the client's documents and records. It is to substantiate the information that is or should be included in the financial statements. Normally supported by at least one document for each transaction. a form of evidence widely used in every audit. It is divided into two. First is internal. Second is external. Internal documentation has been prepared, used within the client's organization, retained without ever going to an outside party. External documentation has been in the hands of someone outside the client's organization who is a party to the transaction being documented. External documents are considered more reliable evidence than internal ones. Confirmation. Receipts of a written or oral response from independent third party verifying the accuracy of information that was requested by the auditor. Relatively costly to obtain. May cause some inconvenience to those asked to supply it. Typically obtain written responses rather than oral ones when it is practical. Types of confirmation requests. Positive. Recipient is asked to respond in all circumstances. Recipient provide the information or the confirmation may include the information, and request the respondent to indicate whether the information is agreed. Negative. Recipient is asked to respond only when the information is incorrect. Confirmations are considered significant evidence only when returned. It is less appropriate than positive confirmation.
Jay, do you understand what Professor Frank said about inquiry at the class?
Yes. Inquiry is a set of questions directed to client employees or third parties with knowledge about a particular matter. The client will answer it in writing or orally.
So what's the difference between orally and writing?
Written responses are more persuasive than oral responses.
Oh, I see. Now I'm sure about that. About the analytical procedures, what is it?
It is used for analyze the financial report. Analytical procedures are important because it compare between financial information with budgets, forecast, and similar industry information. The procedures also include study of the interrelationship between elements of financial information that have a predictable pattern and comparing with non-relevant financial information.
Does the procedures really help the auditors?
Yes, it is. The objectives of analytical is to help auditor in understanding the client's business and identify the potential risk. Before planning the audit, the procedures must be performed, but it can be performed after the audit examination.
Okay. But I've heard that the analytical can be classified as evaluative and predictive. Can you briefly explain to me?
Evaluative is to provide the auditor with an overall understanding of client's business environment and potential risk that require an audit test. However, the predictive is to provide the auditor with an estimate of the level of activity or the balance of the account.
Thank you so much, Jay, for helping me. I clearly understand about the analytical procedures now.
You're welcome, Sarah. You can ask me anytime if you do not understand. Ben, what is reperformance? Reperformance is one of the technique to gather evidence by performed it during audit planning stage. How we do that? It can be done by manually, which is based on client's manual of procedures, or with help of CATs. Reperformance can provide effectiveness and reliable evidence. That's all. Wow. Thank you, Ben, for explanation. Welcome, John.